Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record a video per week, so make sure you ring the notification bell to get notified each time one comes out. This is my stock pick video for the month of October 2024, and this time it is the Canadian Natural Resources, CNQ, on the TSX. Canadian Natural Resources is an oil and natural gas production company which engages in the exploration, development, marketing, and production of crude oil and natural gas. They skew 60-40 oil to natural gas production. Its market capitalization is just over 100 billion, significantly bigger than Suncor, the other big Canadian oil producer. For me, it is one of my primary holdings of old school energy producers. It has a management team that's second to none and is one of the best managed companies in Canada. Management has excellent capital allocation skills with strong assets and a return on equity of 21, meaning great use of assets to produce profits. Management has lots of skin in the game, that is, owns the stock. CNQ has a very strong cash flow that is being returned to shareholders. The history of the Canadian oil patch is that as oil became, quote, dirty, there was much less appetite for increasing production and growing capacity. Canadian oil companies, on the average, break even at $30 oil. So if they cannot invest in additional production via capital expenditures, capex, because it is politically negative, they take the great cash flow, free cash flow, and they buy back shares. They pay dividends and special dividends or pay down debt or all of the above. CNQ has pledged to return 100% of its cash flow to shareholders as they pay down the debt. CNQ's debt to equity ratio is 0.31, which is well below the 1 that I look for, and it will continue to get better. CNQ has a very strong balance sheet. As a value investor, I like the low price to earnings ratio and a dividend, and CNQ is at 13.56 PE as of October 7. And the dividend yield is 4.22% with a payout ratio of 56% of profits, but cash flow covers the dividend 3.5 times. Dividends are growing at 22% per year over the last 5 years, which is amazing. Over the next 5 years, dividends and multiples and earnings will all double, according to experts. My price target is for CNQ's share price to be in the mid-50s. So it won't double for you in the next year, but the growing dividend is what I'm looking for here. CNQ has been solidly profitable for the last 3 years, with only 2020's COVID causing a loss. Their sales depend on the current price of oil, however. The current world situation in late 2024 has seen an escalation of the conflicts in the Middle East, causing worries about oil supply, increasing oil prices, and heading back into the $80 per barrel oil. Obviously, all wars are tragedies, and the current flare-up in the Middle East is no exception. However, geopolitical factors are underpinning oil prices right now, so I am taking advantage. Other bullish signs for oil are that winter is coming, so that will drive up the seasonally cyclical price of oil, which will benefit all oil companies the world over. US energy producers in general have performed much worse than Canadian oil, partly because of the debate on whether shale can sustain production. So there may be a bright future for Canadian oil yet, although the lack of pipeline capacity and no additional capacity on the horizon is a continuing problem for Canadian companies not being able to get our products to the market. Long term, oil demand is still increasing and electric vehicle uptake is flattening due to the high prices and lack of infrastructure. Peak oil is constantly 10 years out, according to the International Energy Agency, and even when we reach that, as high cost producers are forced out of the oil business, supply may decrease and oil prices could still hold up. I believe oil has a 10 to 20 years of being investable. And as the use of oil for propellant fades, there are still other uses for oil, such as for plastics. I am investing in renewables just to hedge my bets, such as Northland Power, Polaris Infrastructure, and Emera, because I think their time is coming, but it could still be decades out. On the downside, oil is a commodity, so all oil companies are in the same boat as far as being price takers and not being able to build an economic moat to keep competitors out of their markets. Everyone gets the same price for what they're getting out of the ground. And of course, commodities are cyclical, not only seasonally, but also with the economic situation. As the economy slows, so does the demand for oil, and the world economy has not been firing on all cylinders. Although the recent stimulus in China has helped with the price of oil, and hopefully demand over time will increase. If you have any requests on what you would like me to cover in future videos, please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.